The S&P 500 is down almost 20% from its highs. If it gets there, we are officially in a bear market. There are so many negative headlines and so many doomsday headlines as if the stock market is crashing and we have so much further to go. I'm going to tell you in this video exactly why I don't think we should be worried as long-term investors at this point and why there's most likely opportunities ahead. Let's take a look at this. Here's the S&P 500 on the day. We're down 1.8%. We could see right here the 52-week high is 48.18. So 20% down would take us right to about 3,855, which is just 11 points lower. We might get there today. This sounds terrifying, and most people probably don't want to be investing, don't want to be adding to positions right now, and have either already sold or are considering selling. If we have not sold at this point, I don't think now is the time to sell based on history. This right here is Y charts, and it shows the drawdowns in the S&P 500's history since 1989. Right here, this line is the 20% mark. You can see right here, we're almost at 20%. This is as of yesterday, so we're a little bit lower today. The S&P 500 has dipped 20% below its all-time highs 6 times since 1989, which is on average about once every 6 years. You can see it here, here, here again, here, here, and then during COVID, and now maybe right now. So that's either 6 or 7 times. If we go down 30%, which sounds horrible, the S&P 500 would hit about $3,400. And so that's only about 12% lower from here. So 30% is a big number, but from here, it's only roughly 12% lower. So are we gonna try, and that doesn't happen very often. We've only been down 30% 2 or 3 times since 1989. So as investors, as people who can't time the market, and we probably don't have time to stare at the stocks all day, are we more likely to sell all of our stocks now and buy in at the perfect time and catch that upside? Or are we better off just holding our shares even though stocks might go down a little bit more? Let's look at what's happened to the S&P 500 over this entire time period, even with these 20% and 30%, even a couple 40% drops. So over this entire time period, the S&P 500 since 1989 is still up 2,140%. That turns $10,000 into $224,000. And that's if you only put $10,000 in one time in 1989 and you didn't have an opportunity to buy along the way. So this right here is why I am not selling my stocks and selling out of my stocks and thinking I don't want to be involved in the stock market. We're already down 20% in the S&P 500. Based on history, the most likely scenario, that's all we have to deal with in investing is probabilities. Most likely scenario is that we have already seen most of the downside. Could it get worse? Could we go down 30% or maybe 40%? Yes. If we go down 40%, that's the S&P 500 at 2,700. There's a couple principles that I use as an investor that help me not worry as much about these big drops because I know they happen. I talk about them on this channel all the time. I don't invest money that I need in the next 3, 5, or preferably even more years than that. I don't take excessive risk with margin and short-term options and things like that because I know I'm not able to time the market and I don't sell out at the highs. And I know that the best thing that I can do as somebody that's not a professional investor is to buy regularly into the market. And we could either do that through index funds, an S&P 500 index fund, or any other number of funds through something like a 401k, or through individual stocks, which takes more time and is more risky. But that's what I prefer to do. Here's my $10K to $1 million portfolio, trying to build this up to $1 million from 2022 to 2032 over the next 10 years with adding money in between and sharing all that right here on YouTube. Not going through all the companies here, but just showing you that I'm invested and I'm losing money just like everybody else. Here are the top positions in the portfolio. Snowflake, $4,900, GitLab, $4,200, Datadog, $3,900, Tesla, $3,900, Cloudflare at $3,000, and CrowdStrike at $2,900. Take a look at the rest of the positions if you want to see what else I own. We're up 1.3% right now on the day. Values at about $40,000. If we look at all time, which I want to share transparently and show you I am down $14,500, says 67% right here, but if you do 14,500 divided by 54,000, which is how much has been put in, I think it's more like around 28, 29%, which is still bad and horrible over this short period of time. But because I'm adding money over time and investing in what I think are great companies, I think I'll do just fine and make up that 14,000 and then some as the portfolio grows and with time. And again, I don't need this money over the short term anyways. So as much as it hurts and as unfortunate as it is, I'm okay with that. Anyways, this is what investing in a bear market feels like. When it is hard to invest, that's the time that I want to be investing. It's hard to invest right now, and so I'm going to keep investing.